So today I'd like to welcome Randall Mountain. He's from a company called Chip. Well, he represents a product called Chip. And I think most of us, when we hear the word chip, we think about something that's maybe not so good for you, something that's tastes good. I think you're going to tell me, Randall, that this is something that's possibly good for a lot of people, but it's a little bit different than something that's edible. So why don't you come on and welcome. I'm glad you could come and join me today. What's Chip?
Thank you very much, Mark, for having me here. And CHIP is a way for people 55 plus to access the equity in their home. CHIP has been around since 1986. Many people in the beginning know it as its acronym, which is a Canadian Home Income Plan. So it provides today's world, access to equity and qualification is difficult, and especially difficult for those on fixed incomes like pensioners, retirees. So we provide a way to access that equity without having to qualify traditionally and without the worrisome payment that comes with a traditional mortgage.
Okay, so that fits nicely into my niche. I do a lot of type of private lending, help people that don't qualify. So talk to me about what problem this solves.
Yeah, thank you. And it solves a lot. And the most common reason that people will take a look at CHIP is they've got existing debt that they can't manage with their cash flow. So some of the debt's accumulated because their income is just simply not enough to retire on comfortably, to do the things they want to do. Over 50% of Canadian retirees are surviving primarily on CPP and OAS, which is around $19,000 a year. So the challenge is, how do I live? How do I pay my bills? And the debt payment that comes, often has in retirement, it becomes a challenge, and they look for ways to have a better life, better retirement.
Well, this is great. So what I hear you saying is, I think we spoke earlier, is 55 is kind of that magic age. So if you're over 50, if you're 55 or older and you own a home and you've got equity in it and you're having difficulties, whether you're on only a pension income or maybe you have a business or whatever, is this kind of what I'm hearing you say, that it's really going to benefit that type of person?
It is, absolutely. So whether you've got existing debt, you may have an unplanned expense that's come up, or helping family. Certainly we see a lot with the down payment. And today, unfortunately, with the pandemic that we all find ourselves in, they're also looking at ways to, how do I, early gift some money to my kids when they need it the most? And
right. So today, I'm having difficulty. So I hear two sides of it. One is accessing equity to maybe help a relative. And then there's the side where accessing equity to help me because I'm maybe on a basic pension plan, or maybe my lifestyle in terms of my income isn't really keeping up to my lifestyle. Does that sound kind of?
Yeah, exactly. I think so many people, less and less people have any kind of company pension or savings program when they retire. And so what they do have, though, luckily, is their home, which is typically their largest asset. And, they've worked hard to accumulate that. Now it's looking at, how can I make this asset work for me without having to sell it, without moving, because I don't want to move. I love where I live. This is my forever home. I want to keep it that way. I want to enjoy life, right? I didn't work for 30 or 40 years to not enjoy my life and be able to do some of the things I want to do.
Right. So you own a home, you've got equity. Tell me a little bit about the qualifying aspect of it. Like, how easy is it to qualify for this?
It is pretty easy. So age, as you keyed in right on, minimum age of 55. So everybody on title, or both spouses, have to be at least 55. Has to be their primary residence and maintain residency in Canada. So snowbirds are fine as long as you're here for 6 months plus a day. And that's it, really. Those are the big ones, right? And they're going to keep their taxes up to date, pay their strata fees as they would today, and their insurance. So the qualification is fairly simple. And we look at, minimal credit checks, because again, we're not asking for a monthly payment to come back, and minimum income.
And is it like typical line of credit? Like, is it like a line of credit where I can pull as I need it, or do I have to take a lump sum, or how does it work?
You've got a couple of options there. You can take a lump sum to cover off any debt or an unplanned expense that you have, but you don't have to take it all at once, which a lot of people think they have to do. If you qualify for, say, $300,000, you can take it as little as $25,000 for a CHIP, if that's what you need today. The rest of it is simply available down the road, if and when you need it. So if you're not using it today, you're not accumulating interest on it. But you can also have, with one of our products, a steady flow of income. if that's what you need for your monthly expenses.
Do you see a lot of people using this program to invest the money, like take out their equity, invest it in programs where it's going to create some other income for them, or is that something that you don't see?
We see it from time to time. For some are looking to really create that wealth for their next generation. So they may look at it as a down payment or towards a rental property. We see it towards vacation homes now. Certainly travel is different. So we've seen a surge in, just everybody looking for that vacation home within Canada. And so they might look at that and say, this is going to be the family's vacation home. When we're gone, the family can continue to enjoy it, and there's no mortgage on it. They don't have to worry about that.
Obviously, we're in a different kind of world right now with this pandemic and things of that nature. So are you finding that it's probably something that is a little bit more attractive now than maybe in the past because of the situation people are in right now financially?
I think it's as popular as ever, for sure. It's created different needs, I think, than we saw in the past. We've seen income and employment disruptions across the board. So not just somebody in the millennial age group, but certainly those that are well established in their careers finding themselves in a different spot. And certainly, we used to see people, the bucket list travel, right? You retire, you're like, hey, I'm going to travel, do everything I can. I'm healthy. That's on pause for a lot of people. Now it's, hey, can I renovate my kitchen? Because we're looking at these walls a lot today. So right. Certainly renovations and staying in their homes. Absolutely. Yeah.
So in ending, just give me, in speaking to your perfect audience out there, who watching this would be a perfect fit for this product?
I think the perfect fit is somebody that is looking for an alternative, a solution to do the things that they would like to do, that they haven't, and maybe they've been putting it off because they just didn't realize it was even possible. And I think somebody that's looking to help family and really just to enjoy their retirement comfortably, right? So not have to make the sacrifice of moving or relocating if they don't want to.
So in essence, this product, and obviously I offer it through you guys, it's like accessing the gold in their backyard, because really it's in the soil, and it's not doing anything for them sitting there. So paying off debt, renovations, helping loved ones, schooling, or purchase other properties. Would you say this is kind of like that niche for this product?
Yeah, absolutely. Absolutely. That the last one that comes in a lot with some is the home care, the health care, right? As a age in place, everybody was looking to age in place. So it's whether it's modifications, but also bringing in additional support. So it might be, bringing in support for my parents. That's Excellent. What I'm looking for.
So just in closing, how long would you estimate an application from the time someone reaches out to me and says, okay, Mark, I saw the video, it's might fit my, my desires in terms of I've got this equity in my property, from funding? So from the date they apply to the date they fund.
Realistically, if there's a mortgage in place, I would say 4 weeks. Everything. We've got an appraisal, we've got the documentation together, very minimal documentation, and then arranging meetings to sign everything.
Right.
Virtually. A lot of it's done virtually today.
You cut out for 2 seconds at the most important part there, when it was like, how long does it take from the moment you apply to an estimation of, funds in bank?
I would say in today's world with COVID, I'd say about 4 weeks.
About 4 weeks. Okay, that's excellent to hear. Okay, Randall, thanks for joining me. I'm sure if anybody has any other questions, they're going to come through me and I'll present them to you. But I'm excited to offer this product, and I think it's going to help a lot of people.
Yeah, thank you very much. I'm looking forward to the continued partnership, Mark.
Thanks, Randall.